The Nigerian equities market is locked in some rounds of gains so far. This year, up about 11.3% as at the last trading session. Can the market sustain this uptick in the long term? And how quickly will a market correction set in? Oluwaseun Dosunmu, Head of Investment Research at Parthian Securities, joins me now for more on this. Thank you so much for your time today, Seun. But let's first get to the close market today. The sentiments we're seeing play out today, and if you think this is also sustainable.
Hi, Ken.
Yeah.
Good to be here.
Yeah.
We've actually seen the markets move in levels that we haven't seen before on the exchange. Like you mentioned, the market has rallied, yes, and we expect the market to actually pull back at some point. I mean, based on what's happened today, it's not surprising because what we've seen is the linear move on the exchange. So we expect a rebound at some point. We expect the market to pull back and to correct a bit. And right now, what we're actually seeing is investors reacting to dividend plays and, the fact that positive real return, you can get positive real return from the market, given what inflation rate is currently doing. Apart from that, we've also seen the bandwagon effect based on how the market performed last year. We've seen that the market actually did a return of about 46% last year, and we have a lot of investors trying to come into the market to take advantage of
The opportunity there.
Yes.
Yeah, because we're talking about opportunity in the market there. For me, one significant point to note last year was the performance of the small cap stocks. And I'd like to get your thoughts around first, because I'm still searching for the fundamentals backing that performance from last year. And if you think we could see a replay this year.
Okay, so based on what happened last year, we know that generally the fundamentals of a lot of companies are shaking, and we're seeing reduced volumes. We're not seeing as much demand as we used to. So in addition to that, we've had a couple of companies exit the market, especially in the consumer goods and the healthcare sector. That's definitely will have a ripple effect on the economy. So what we actually expect is that we expect some form of recalibration on the economy based on, the government's plan and the budget. We expect to see some form of stability in the exchange rates. I know that that is being optimistic, but I mean, that's only what we can do right now, because if that comes into play, that would actually trickle into every other sector of the economy. So we're actually optimistic and looking forward to see what will come into play in terms of the policies that will probably be implemented by the government.
Yeah, because now we're looking at almost 8 days into the market, talking about Wednesday this week. Market is still doing just above 10% yet to date. First, when you look at the rest of this quarter, do you think we have that power to sustain that to that length?
So right now it's actually a bit difficult to predict.
Yeah.
Reason being that when we started the year, we actually forecasted that
Yeah, but there's still some catalysts ahead down the line. We're going to get the full year numbers coming as well. Dividend payout and a couple of other things are going to catalyze the market then.
Yes, I mean, all those would add to push the market, I mean, north for the rest of the quarter. However, I mean, based on historical trend, we know that after dividend payments, we tend to see investors actually pull out from the market. So we expect the first quarter to actually look good. I mean, way better than previous years. Right now, we're seeing that as of yesterday, the year-to-date return was about 11.3%. As of now, the year-to-date return is about 9.7%, which is still far better than what we've seen in the last 5 years. So one of the key things that investors will be looking out for has to do with the dividend declaration. That would actually spur investors' appetites in the market. But there's another thing that's come into play. Now, if we're looking at the global scene, you would see that the U.S. Federal Reserve has said that they're planning to cut interest rates this year. What does that mean? That means that investors might that's foreign investors now will start to look for better return in the emerging and frontier markets. And, Nigeria is part of that, which means that if we sort out our FX volatility issues, we might actually see foreign investors come into our markets. So that is another thing that we need to look out for. So all eyes on the government and the policies that they're going to come up with
Yeah,
because
the stage is set. It's just how well we're going to make good of what the fortune brings us. But thank you so much for your time today. Oluwaseun Dosunmu is the head of investment research at Parthian Securities.